The Canadian economy ended 2025 with a slight decline. Preliminary estimates from Stats Canada suggest real GDP will remain unchanged in January as well. Here to provide some analysis on the data released by Stats Canada is Claire Fan, senior economist at RBC. Claire, thanks as always for joining us.
Thanks for having me.
What number stands out for you the most?
I think the overall sort of headline GDP decline of 0.6 annualized rate is definitely eye-grabbing, but the underlying details, again, if you were to look at spending by Canadian businesses, by Canadian households, and by Canadian government, they all look pretty healthy. So I think rounding out the year, 1.7% growth for 2025, considering the headwinds that, the Canadian economy was facing last year, record slowing population growth and a historical trade shock, I think the growth rate itself tells the story of Canadian economic resilience.
And what does this mean kind of heading into 2026 then? Are we on the downward? Are we on the upward? Or is it still hard to read?
Yeah, well, we're still cautiously optimistic about the Canadian outlook, economic outlook this year. I mean, one of the key headwinds that I was talking about, population growth, according to PBO's estimates and our own, basically for this year, is still that it's going to be quite slow. It's going to be flat, essentially. We're not going to see a ton of population growth, and that's largely just driven by the government's sort of changes in immigration policy. But the second headwind, trade uncertainty, certainly felt like it was perhaps escalating over the events over the last weekend. But actually, if you were to look at some of the details, one of the key things that we continue to point to is CUSMA exemptions. And that was the key question, were those exemptions going to hold against the new tariffs, new U.S. tariffs? And they did. So all of those key assumptions kind of leading into our continuous sort of assumption that a lot of these headwinds may be kind of unwinding a little bit for 2026. And couple that with sort of the resilience in the Canadian economy that we talked about just now in 2025, we think is going to be we're cautious obviously about that outlook, but so far we're still pretty optimistic about the Canadian economy.
And has CUSMA been a lifeline for our economy right now?
Absolutely. So CUSMA, to basically paint the broad picture, is shielding around 90% of what Canada exports to the United States from U.S. tariffs. And that includes the new Section 122 tariffs, 10%, that was just imposed last week. That was later threatened to be raised to 15%. But certainly that is one of the most important assumptions that we do have as well, is that heading into sort of the review process starting in mid this year, we're going to continue to see those exemptions remain in place.
All right, and just kind of going back to the quarter that we just saw, one of the worst since the pandemic.
Yeah, so the quarterly decline was definitely, pretty substantial. But if you were to look at sort of the production side of things, we've been pointing to tariffs sort of impacted sector. A handful of manufacturing subsectors still really saw production. Actually, manufacturing GDP dropped by over 6% on an annualized basis in the fourth quarter. So the sectors that are impacted and targeted by U.S. tariffs, without a doubt, were still underperforming. But the catch there is the rest of the economy. So it doesn't appear to us that any of that weakness in any way has spread to the rest of the economy. And that's sort of the good signs that we're still sort of cautiously anticipating will be the case this year as well. And finally, the last thing to mention here is that rounding out the quarter, the last monthly print was actually pretty positive. It was 0.2%, almost nearly to 0.3%. So a lot of the softening was really tied to earlier on in the quarter, and we started to see some improvement actually as we get late into Q4.
One of the things we saw, wages rose, I believe, in this last quarter. Any concerns about inflation with that?
Yeah, so that's a good question. Wages has been coming down broadly, and if you were to read any sort of business survey out there, including sort of the Bank of Canada's own survey on business conditions, I think broad concern on hiring and capacity constraint is still very absent. We're not seeing any indicator or any indications of Canadian businesses saying we're having difficulties in terms of hiring workers, and that lends to sort of this expectation that wage growth in Canada should continue to moderate, even though it's taking a bit longer. So yeah, the year-over-year number is a bit stronger still, where it's been moderating quite slowly. But frankly, given sort of the inflation shock that we saw over the 2022 and 2024 period, if you were to really look at the aggregate wage measure versus inflation measure, we're still seeing actually pretty subdued real wage growth.
And for the bank, where does it leave it when it comes to either rate cuts or rate hikes?
So the Bank of Canada made it pretty clear. I think they're pretty comfortable with where rates are currently, borderline stimulatory levels to 25%. And I think today's report, again, the headline's a bit softer than expected, especially comparing to the bank's own sort of forecast for the quarter. But the details certainly do not sort of speak to the need essentially for more central bank easing. And that's, I think, our expectation as well as consensus is that there really is no additional sort of need for the Bank of Canada to be further easing rates, even though actually inflation in Canada has actually been pretty soft. So should the Bank of Canada need to cut rates, they definitely do have the room to do that. But today's growth report just speaks to, there's really no need essentially for additional easing from monetary perspective.
Okay, and just one last question. I just noticed it as government capital spending jumped by 20%. How much of an impact is that having on the overall picture, and is it healthy for the government to be spending that much? I know it's stimulus, but is it good the government spending that much?
Right. So that's a great question. So for a long time during 2025, we kind of spoke about this handover from monetary policy to fiscal policy to essentially really help curb the economy from, just in terms of dealing with the trade shock. And that's a really great question. I mean, cyclically, in the near term speaking, it's definitely not healthy. I think we're seeing some of the provincial governments as well posting pretty large sort of deficit projections yesterday from Alberta, including. But over the long run, if you were to think about, again, sort of Canada's broader priority, especially the most primary priority is to diversify our trade away from the United States. And that does entail a lot of infrastructure spending in the near term. So for that to facilitate that process, to better our ports, better our infrastructures, to enable that export capacity. So it is a little bit of trade-off in terms of short run, fiscal sustainability versus long run priority in the economy, but that's certainly what we're seeing this year.
Okay, Claire, we'll wrap it up there, but thanks as always for joining us.
Thanks, Roger.
Claire Fan is senior economist at RBC.